You're listening to AI Prism from Seoul Economic Daily.
The key figures from May's session, and what they actually mean for June. It's Monday, June 1st. Here's what investors are watching in Korea today. The KOSPI closed May with a 28.45% gain, on top of a 30.61% surge in April. Back-to-back monthly gains of that magnitude have no precedent in normal Korean market conditions. The May figure alone is the highest May performance ever recorded, beating the previous May record from 1990 by more than 12 percentage points. In the full history of the KOSPI, only post-crisis rebounds have produced larger single-month moves. Now the June setup. Brokers are broadly calling for a rotation out of the leaders and into oversold names. The logic, concentration risk is at a 26-year high. The top 10 stocks now account for over 60% of KOSPI total market capitalization, the highest reading since June 2000. Samsung Electronics and SK Hynix are driving that concentration, and passive fund rebalancing is creating sustained mechanical selling pressure on both names. Foreign investors sold 44.7 trillion won in May alone, roughly $31 billion, and cumulative foreign net selling for the year has now crossed 100 trillion won, approximately $70 billion. The calendar risk in June is real. Korea's derivatives expiry, the quadruple witching date, falls on June 11th. The U.S. Federal Open Market Committee meets on June 18th. The U.S. triple witching follows on June 19th. Any one of these could amplify volatility in an already extended market. The earnings trajectory reinforces the rotation argument. Samsung Electronics operating profit is expected to grow from 57 trillion won in Q1 to 107 trillion won in Q4. But the quarter-on-quarter growth rate decelerates sharply. 49% in Q2, then 18% in Q3, then 7% in Q4. SK Hynix follows the same pattern. The absolute profit numbers keep rising, but the rate of upside surprise is narrowing. Sector rotation calls from Yuanta Securities and Merits. Securities both point to the same candidates: secondary batteries, shipbuilding, defense, and brokerages, sectors that have underperformed and where foreign ownership has been quietly increasing. Two ETF stories shaping the market structure this week. Korea's ETF market crossed 500 trillion won in net assets on May 27th, the first time ever. That is roughly $350 billion, and it puts the ETF market at 85% of KOSDAQ's total market capitalization. The gap is now only 91 trillion won. The ETF market is approaching KOSDAQ scale. The concentration inside that ETF market mirrors the broader index. Of 81 ETFs launched in Korea year-to-date, 40% are semiconductor-related products. On May 27th alone, 8 asset managers simultaneously listed 16 single-stock leveraged ETFs on Samsung Electronics and SK Hynix. 16 new products in one day is a record. One-third of all listed ETF products now include Samsung or SK Hynix. The second ETF story. Carbon credit ETFs are the top-performing commodity ETF category over the past month. The Hanaro Global Carbon Emission Rights Futures ETF gained 12.3% in the past month, the best performance among 28 commodity ETF products. The SOL equivalent gained 10.4%. The driver: energy prices have surged since the U.S.-Iran conflict, with Brent crude near $90 per barrel and UK natural gas up over 40% from February levels. Higher energy costs are pushing power companies toward cheaper coal-fired generation, which carries higher carbon intensity, which increases demand for emission permits. EU supply reduction commitments under the Fit for 55 policy support the medium-term price. Summer cooling demand adds a near-term catalyst. On the distressed asset side, Homeplus, Korea's second-largest hypermarket chain, currently in court receivership, has relaunched its M&A process. PwC Korea has sent teaser letters to over 10 domestic and international strategic investors, including Nonghyup, Lotte, Shinsegae, CJ, and Chinese platforms Alibaba and Temu. The store count has been cut to 67 large-format locations from 126 last year. A parallel dual-track structure offers either a full business acquisition or a carve-out of premium real estate assets separately. The court deadline for a restructuring plan approval is July 3rd. If no credible deal materializes, liquidation is the likely outcome. 3 things to watch this week. The June 11th KOSPI derivatives expiry is the first volatility test for an overextended market. Watch which sectors absorb rotation flows. Secondary batteries and defense are the consensus calls. And monitor Homeplus creditor meetings for any signal on whether a buyer emerges before the July 3rd court deadline. That's today's AI Prism, Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.